All right, guys. So today we have AI stock C3 dropping their quarter 4 earnings report and call.
And yeah, it'll be an interesting day, man. I'm up a lot on my swing trades today. Uh, Good day for my swing trades, even though Nvidia and the other AI chip stocks are kind of dropping, or they have been at least. Yeah, I'm curious to see what kind of market action we get today, to be honest. The numbers drop at 4 p.m. While this isn't a huge name, it's still relevant for the market for sure. And hey, what's up, DSK, Liam, Game, Rich? So we'll see what kind of numbers we get here for this. Hey, what's up, DSK, Liam? Yeah, let me know what you guys think. We'll C3.AI stock beat, miss, or come in as expected for earnings. Beat, miss, as expected are going to be the 3 options. We're also going to do a Twitter poll. And so far so good. We got a decent amount of people here already. We got about 50 people here in about a minute or so. So yeah, here's C3 on the right side. It's had a pretty rough day today, but it has had a very strong 10-day period where it's up almost 100%, probably about 90% currently. Again, if you guys remember the swing trades we bought this morning in pre-market, we bought Coca-Cola, Walgreens, and Walmart. And so today on my swings, I am up about $215 right now, about 250 bucks. We had some really good swing trades. Doug Polk ended up losing 1.2 million at the $1 million cash game. But yeah, man, honestly, we're doing really well today. We're going to do our poll. AI drops. All right, so yeah, let's see if we beat miss or come in as expected here. Hit the like button as well if you haven't already, guys. Hit the notification bell. Hit the like button. We appreciate it. And you can vote on the poll right now too, if you want to. Hey, what's up, Hernan? What's up, AK? So the earnings coming out. They're discussing the debt ceiling thing now. Gotcha. What's up, Vanessa? BG Flammable. I don't know whether you should buy it or not right now. I don't generally gamble on earnings play, so I don't generally only buy up something ahead of earnings. I usually try to be patient and wait for better entries than just before earnings. So I don't know whether you should buy it or not. I hope you make some money. Looking at our poll so far, 36 votes, 47% think they're going to beat, 31% think they're going to miss, and 22% think they're coming as expected here. Yeah, we also have Salesforce, which is CRM. I believe we have Snow. Disney breaking highs again up to 88.10 or 0.1 right now, I should say. Yeah, so looking at the full list of earnings, C3 is expecting today 18-cent loss per share on 71.32 million in sales. So we'll put this up. Again, 17-cent loss per share on, again, so C3 is expecting a 18-cent loss per share on 71.32 million in sales rev. Let's see, I said 72.3 million, right? Let me make sure I got this right. I think this goes live at 4:20. All right, so yeah, 18-cent loss per share, 72.3 million. Oh no, 71.32. Okay. There we go. All right, so we updated that. Yeah, you can see the SPY very strong today. Again, we bought Walmart, we bought Walgreens. That all did pretty well today. Here's C3 up here. So C3 is still dipping. Again, here is what my swing trades are looking like today. So here's what my swing trades are looking like. We're up about 230 on our swings today, about 230 bucks a share. I will take it. C3 starting to finally break down, but we are green today. Nicely green on Coca-Cola, PayPal, SOXS, Walgreens, Walmart. We were patient. We held these. Specifically, we held PayPal and just kind of let that work. You know, we bought Disney. We're still red on Disney overall, but it's coming back. We bought Walmart yesterday or today and rode that up really nicely. Yeah, we also have CRM coming out with their numbers too. CRM is Salesforce. We also have CrowdStrike as well today. So this isn't just a lone earnings report. There's a bunch of good ones coming out today right at the bell. Again, CRM comes out right at 4 p.m. on the dot. CrowdStrike drops theirs at 4:05. And then AI drops theirs at 4:15. So we'll have some breaks in between each one, and we'll be able to cover each one pretty heavily too. Again, looking at our numbers here, we did a Twitter poll as well. 44 votes already. 75% of people think they're going to beat. 18% of people think they're going to miss, and about 7% think they're going to come in as expected here. So, got a lot of hype for this. Again, we can look at their AI graph to see what they're looking like. And so here is their EPS graph. So if we're looking at their actual EPS quarterly, which is really the one you want to pay attention to. So here's their EPS graph quarterly. So here's the last few quarters here. This one, the last one came in at 57-cent loss, 63-cent loss, 67-cent loss. And so they're projecting a much smaller loss than they've had prior. So if this is accurate, it'll come in about right here. If we come in as expected, it'll come in about right there. That'll be where, and that's a much better look on the chart for sure. And this is in terms of EPS. So this is profitability. And so, you know, a lot of times young companies, they're going to have to work until they're actually profitable. Let's look at their revenue. Revenue is a nice tell of what their potential is. And their revenue has been doing their revenue graph looks a lot better than this. You know, their last revenue was 0.67 billion. And you can kind of see their revenue graph is looking much healthier than this. We have a nice little range of trend on revenue for C3 here. And so, yeah, we'll see what happens. Revenue gives them good potential with AI hype. This is one of the companies that's posed to do some damage in the sector. So, yeah, we're getting some votes too. About 75% of people think they're going to beat on Twitter. 20% think they're going to miss. 5.5% think they're coming as expected. Crazy run up for this one over the last few days. Falling down a little bit today as Nvidia drops, but a crazy run up. To the moon. Hey, let's see. Yeah, 65. Yeah, if we look at the float size here for C3, and again, you can kind of see Nvidia on the left side. So Nvidia had this crazy run, but it's been a good week for AI here. If you look at a 90-day chart's impressive, but a 10-day chart looks good too, man. Again, Nvidia has made the famous run, and you can kind of see C3 moved in sympathy to this. Much more profound in Nvidia, of course, but still good for the whole sector as a whole here. There's a lot of hype about AI today. Meta asked the federal court to block the FTC's attempt to impose new sanctions for privacy. All right, so Apple App Store commerce rose 29% to 1.1 trillion last year. Yeah, we have Salesforce earnings today as well. Those are going to be big too. So Salesforce comes out with theirs at 4 o'clock on the dot. Salesforce comes out with 4. CrowdStrike shows up at 4:05. AI drops at 4:15. And then we also have Chewy today, which is dropping at 4:05, so 5 minutes after the open. So yeah, but we'll cover all these for sure. We're going to cover all of this stuff for sure. But yeah, I don't think this dip means too much. I mean, we have this big run up here, and now we're dipping down a little bit. So I think this one, especially with the gains that this has made. So again, this is Q4 earnings. And so with the gains that this one has made, in the chip sector overall, yeah, this will be big. So these are this is the quarter. So yeah, this is the quarter beginning on 1/31/23. So this is the last few months of AI numbers. Got a bunch of votes on Twitter now too. 75% still think they're going to beat. About 17% think they're going to miss. 8.5% think they're going to come in as expected. CrowdStrike, yeah, we're going to come out on CrowdStrike number. Oh, I bet you CrowdStrike does. They have to. CrowdStrike, I think, is interesting as a company. CRWD, I mean, it's an interesting company for sure. The only argument I have for CrowdStrike, I think with the AI boom, CrowdStrike is going to do okay. So I think with the AI boom, CrowdStrike is going to do fine. I think any tech stock that is even indirectly related to artificial intelligence is going to do okay. Love you. Yeah, good luck. I says, bro, I'm about to ish myself. Hey, good luck, dude. Stay smart though, man. Don't take too much of a gamble, bro. So don't gamble too heavy. All right, guys. And again, AI is at 39s right now. 39s for AI. We'll see if they continue this move. But we got some heavy support at about $38 right now. Some heavy support at about $38. Yeah, Salesforce, CrowdStrike dropped theirs too. We're going to cover all of them as soon as they come out. And so again, subscribe. Hit the like button as well. Help me get over 100 likes real quick if we can before the numbers come out. We still got about 15 minutes until the end of the day. Or until the closing bell. The actual numbers for AI don't drop until the numbers come out at 4:15 market time. So we still got a couple minutes, and then the actual earnings calls at 5 p.m. and we're gonna stream that too. At least we're planning on it right now. Again, looking at our votes, 61% think they're going to beat, 21% think they're going to miss, 17% think they're going to come in as expected. Again, vote on that poll. You could also give us a follow on Twitter at Beginner Trades is our Twitter handle. And yeah, we'll see if we get something good today. I'm excited. I want to see how this will move the market. Nvidia has caused some huge runs in markets the last few days. Been one of the, honestly, a historic run. Like the Nvidia run is absolutely historic, man. This thing is bigger. This is a bigger run than most other blue chips have ever done. There's been bigger runs before, but this is definitely historic. This will be what people remember from this year, I think, specifically AI, specifically Nvidia and C3. I think that's what people are going to miss or remember. Yeah, SPY moving up. Honestly, my swings are doing great. Again, remember I bought up. Yeah, SPY just popped to 419s ahead of this. Remember I bought up Walgreens this morning, which is testing highs again. I bought up Walmart. I'm in Disney. So we'll give this time, but yeah, Salesforce is big too. We're also in Coca-Cola, which is still doing really nice too. I'm kind of slowly taking some profit off of Coke. I took some profit off of that. I took some profit off of Walmart. I mean, I might as well lock in profit as if I have it, is the way I look at it. Well, whether it hits or misses is just relevant. It's just related to, it's relative to what they set their expectations at for C3. Now, this is a company that is big, that should, by all logical senses, should have had a huge quarter. It should have had a huge quarter. This is one of those stocks that should have had a big quarter, with AI picking up as much as it is. And I'm using AI much more in my everyday life. I got headshots from AI. So AI is becoming really a world-changing thing, and it has been for the last 6 months. And so, by that logic, of course, it seems like it would do well during this earnings report. Here's the thing. Even if it misses, it's still not a guarantee that it's not going to go up. It's still possible that it does rip up, even if it misses, even if it doesn't come in as good as people expect. A lot of people are going to be paying attention to revenue. A lot of people are going to be paying attention to potential guidance numbers that drop. And look at AI pop up right now. It's at 39.50s. So AI bouncing up right now at 39.50s. Still under 40, but you can kind of see it move here on the right side of the screen. Still trying. Still moving up. So, yeah, we'll see. All right, so the vote is scheduled for today for the debt ceiling. For people asking, I got a couple people asking about the debt ceiling vote. The House of Reps is due to vote on it today. It's a big step in avoiding default. Hello. Damn, dude, my other pair of headphones fell in my coffee. That's the second time that's happened, bro. Second time that's happened. But yeah, look at AI rip. Look at C3 pop. Over VWAP, over 200 EMA. Nvidia's not even following it. It doesn't need to. I mean, it's a different stock, so. But yeah. Yeah, I'm doing pretty well today, man. Again, here's my P&L so far on my swings today. A lot of the swings I bought earlier this morning are doing pretty good. You know, we're up about 230 right now. So yeah, my swings are going well. We'll see if it keeps it up. Hey, what's up, Shepard? Yeah, the last time my AirPods fell in my coffee, we took them out. They dried within like 10 minutes. They worked fine, you know. And so we'll see if that happens again. I don't know whether I should do with PayPal. What do you guys think of PayPal? I'm still in PayPal. I've been riding it up. I've made enough money with it. The last 2 days, I've been able to scale out of it nicely. PayPal currently, where's it at right now? PayPal currently at $62. We've been scaling out. I think I'm just going to stay in the rest. We're still in Disney. We're still in Walmart, man. Walmart, our average on Walmart was 145.60s. It's at 147s today. So we made bank from that. Walgreens as well. We had a lot of people that were like, don't buy Walgreens. Walgreens at 29.97 is where we got in. It's at 30.4 right now. So that one did really nicely too. And that's a small range stock as well. So we'll see how that one goes. We're in a few other ones as well, but yeah. Yeah, I think the big risk for PayPal is that the big risk for PayPal is like crypto is getting pretty cheap to send. Crypto's getting pretty cheap to send. What are you talking about, SD? What are you talking about, the crypto? SDA. Suncar? Yeah, I don't know anything about that. Didn't AMD used to go up? Yeah, so AMD's related for sure, but AMD's basically been moving with Nvidia. You know, AMD, the PE ratio on AMD is crazy high. It's like 50 something or something crazy, or it's like 500 something. That I think, I'm not 100% sure, but I think it's super high. Yeah, Salesforce would be big too. We'll see. You know. Yeah. Yeah, we're kind of trying this earnings call out here. I don't know how big this one's going to be. If it's not that big, we might just kind of cover, you know. Salesforce is running. So yeah, CRM is the other one with earnings today. So CRM. Yeah, CRM's testing highs right now too. Yeah, remember, we also have Salesforce. We also have CRM. All right, so yeah, C3 earnings, guys, drop in about 25 minutes or so. They still got about 25 minutes. Look at AI though. AI up to 40, just tapped $40 a share here. Look at CRM, which is Salesforce. These Salesforce drops theirs at about 405, I think. 405 market time. Yeah, good luck. So is it 500? Yeah, man. That's the only like the PE ratio in AMD. But I mean, it depends on how. So a lot of people thought Tesla was overextended years ago. You know, and Tesla ended up proving a lot of them wrong and just kind of keeping moving up, because even if I type AI, here's the interesting part. If I type in AI, this was a conversation I had with AI this morning, right? So I was asking Bard, it might have been Chat GPT, but I was like, hey, give me a list of the top 10 low PE blue chip companies. Give me a list give me the list of the top 10 high PE companies, top 10 blue chip companies with the highest PE ratio. It didn't include AMD. And then I said, well, hey, and then I even asked it, I said, well, hey, what about AMD? Its PE ratio is over 500. And it actually excluded it. And the AI told me, it said, hey, AI is a growth stock, just like Nvidia is. And so while the PE ratio is high, it's a growth company. So it's basically changing the sector. And so that gives it a little bit more room. And I think, I think the AI system is right. Of course, I wonder what their bias is, but it was interesting having that conversation with AI this morning. And they told me, like, look, I could show you conversation. It was with what is the PE ratio of AMD? All right, look at Salesforce fly up here. So this says that AMD's PE ratio is 52.2. Okay, so yeah, AMD PE is 545. That means investors are willing to pay 545x. AMD's earnings per share, a high PE can indicate that investors are expecting future growth. Man, look at Salesforce though. Salesforce is popping. And look at C3, man, up to $40 a share now. Still making moves. Still doing stuff. Almost up to 40. And again, we still got a couple minutes here. Leak on Salesforce earnings? No, man. Every big report, you get somebody telling there's a leak, and there's never a leak. It's usually just kind of people wanting there to be a leak. But yeah, AI testing $40 a share right now. We'll see if it holds. But yeah, I'm looking at Salesforce. I don't see a leak. Salesforce is at a good run. Look at this, up to 222s right now. Let me see what the PE ratio of Salesforce is. The good thing about Bard and other AI systems is that I can literally ask them about themselves. What is CRM stock PE ratio? Let's see what it tells me. 85 for Salesforce. So Salesforce has a high PE as well. Again, growth companies is But again, we'll see. AI up to 39.80s here, guys. 39.80s. We still got 5 minutes, about 4 minutes before the closing bell. But we'll see. Money may be moving from Nvidia to AI. Maybe. I think they move with each other, though. I think when AI goes up, when Nvidia goes up, AI is going to follow it because it's sympathy. Sympathy movement. So like what's good for AI is what's good for Nvidia as well. And a lot of these are trending with each other. Although Nvidia, I do believe you might be right now, though, because Nvidia has been dropping down about $5 a share over the last 5 to 10 minutes. And during that period of time, AI has been moving up. And so it could be people transitioning from one to another. It's possible. Yeah, Palantir, what did it do today, man? I heard a lot of people talking about it. Palantir bouncing back a little bit. Still not at 15, but it did have a green day for sure. And Salesforce still flying up. Again, Salesforce numbers will come out. I believe it's like, let me see for Salesforce. Salesforce numbers are going to come out right at 4 o'clock. So watch this left side here. This left side will release earnings as soon, like right when the bell closes. when the bell rings and the market closes. We did a Twitter poll as well, guys. If you haven't already, give us a follow on Twitter. It's at Beginner Trades on Twitter. There's my Twitter handle. Give me a follow. Again, it's up to 224s. AI dipping down a little bit. We've got 2.5 minutes before the opening bell. Again, make sure you hit the live button next to the play button to show you're subbed. Hit the notification bell as well. Today was kind of slow. I thought tomorrow is actually a big day. The next 2 days of the week are pretty busy. We've got jobless claims, non-farm employment change data, manufacturing and services PMI tomorrow, and then Friday we have unemployment and payroll numbers, mixed with a bunch of other stuff too. And so the next couple days will move markets. So y'all be careful. Salesforce making a big drop here, guys. A big drop right before the closing bell here. Look at this drop under VWAP, under 200 EMA. It's nothing compared to the big run it's been on, but we are dropping for C3 down to $39. CRM is up to 224s. Let me make sure they didn't release anything early. Doesn't look big enough to be. All right, CRM still making moves. All right, guys, we got a minute and a half left. Look at this pop for AI right before the close. Maybe option trading activity is what I'm assuming here. CRM pumping up too, man. Wow. SoFi. All right, guys, here's the close. We got a minute and 15 seconds left. And again, Salesforce on the left is going to drop their numbers here. So Salesforce drops their numbers at right at 4 o'clock on the dot. At least that's when they're scheduled to. AI is not scheduled to drop theirs until 4:15, so we still got about 15 minutes before AI drops. But Salesforce hit 225. Guys, less than a minute here. Less than a minute. We're also going to throw it in sub-only mode. So if you haven't already, hit the subscribe button, guys. Hit the notification bell. We appreciate it. Man, look at this run. 40.2s right now, 40.2s. AI might hit 30 again on a bad report. I mean, it's possible. But I mean, again, the last 6 months have been really strong for AI. So I would assume they're going to do okay. But who knows? Nobody knows here. Again, we also entered in sub-only mode. So if you haven't already, hit the subscribe button. Here is the earnings report for Salesforce on the left. So here's the Salesforce earnings report. CRM is the symbol. And that is the closing bell. So let's see how this moves here. We're at 224s right now for Salesforce. AI closed over 40. It's at 40.2. 40.2 for Salesforce. Yeah, CrowdStrike also releases theirs today too. We're watching that as well to see if we get some volatility. AI moving a little bit in after hours though. It's at $40 right now. Big candle wick right here. Doesn't look like CRM's out with their numbers yet. That's a big candle wick. No, CRM, I don't see them out. I mean, they just broke the highs of the day here, so maybe. Let me check to be sure. I don't see anything for CRM, but I'm waiting for it. We'll report it when we get it. But Salesforce did just pop over 225s. You can see it right here. C3 is not out with theirs yet. They're just kind of consolidating. We're ready to drop theirs too. We just got to wait. All right, so again, nothing out for CRM yet. Nothing out for AI yet. CrowdStrike, still waiting. CrowdStrike did achieve an IL-5 authorization to secure the U.S. Department of Defense. Again, Salesforce was scheduled to come out right now. They might be a little bit late. CrowdStrike is scheduled to go there at 4:05 market time. So we still got about 3.5 minutes until CrowdStrike was scheduled to drop. But it looks like CRM is a little bit late right now. AI is still at $40, so it's still trying. Again, everybody write in chat. Let me know what you guys think is going to happen for AI. Do you think they're going to beat, going to miss, going to hit? Let me know what you think about CrowdStrike. Put the symbol and then put whether they're going to beat or miss for CrowdStrike, for AI, for CRM, Salesforce. Again, let me know what you guys think. They're going to beat, miss, or what. What's up, Lewis? Again, CRM's right at the high of the day. It's been sitting up there now. You can kind of see it up here. It's right at the high of the day. Salesforce is not moving much since the earnings report, but it is consolidating around the high of the day. AI is consolidating as well, just around $40. AI will rocket. AI down on earnings. AI will miss. Sell fast. Well, I don't know. I don't think earnings are going to be influenced by what happened in the last few days. I mean, at least not the actual numbers are not going to be. Other stuff might be, but the numbers aren't going to necessarily influence it too much. There's CrowdStrike's numbers here. I don't know if CrowdStrike's. I don't know if these are them. Yeah, still waiting. CrowdStrike moved a little bit in and after hours. But I don't think they're out with there. Hey, what's up, Guts? Yeah, AI. Let's see if it does, man. We'll see. All right, AI breaking down a little bit. All right, nothing out yet. CrowdStrike, nothing out yet. AI is not out yet. CRM's not out yet. Again, AI is scheduled to release theirs at 4:15. So if they're going by the schedule, we still got about 11 minutes left until their numbers come out. If they're going by the schedule. Here's CrowdStrike right here. They're scheduled to drop theirs at 4:05. They're gapping up a little bit in after hours, but I don't see the actual numbers out yet for this one. All right, so again, still watching for CRM. Nothing yet. CrowdStrike, they achieved IL5 authorization to secure the Department of Defense, but that's the only news. No earnings yet for them. Chewy. Yeah, Chewy's coming out with their numbers today too. Chewy is scheduled for 4:05 as well, but I don't think they're out with theirs either. Yeah, nothing else. We'll see a move. Like, you'll be able to see all this stuff move when it happens. CrowdStrike, Chewy, Salesforce. You'll be able to watch it move when they happen. All right, so CRM broke highs again, got up to 226.40s, and then retraced a little bit. I don't think this is earnings, though. All right, there goes Chewy. Chewy just came out with their numbers. You can see them popping up big, up to over 31s. Watching CrowdStrike here, because that's when they're scheduled to come out with their numbers. There's Chewy making big moves. Here's CrowdStrike. Here's Salesforce. Salesforce dropping down. It looks like they're out with their numbers here finally. Let's see what the CrowdStrike numbers were. All right, CrowdStrike or CRM breaking highs here. CRM came in at 169 EPS. 169 EPS on 8.25 billion in sales for Salesforce. 169 EPS on 8.25 billion in sales, and they expected 161, so better than expected EPS, better than expected revenue as well. I don't know why they're down. This is good numbers. They also guided from 8.51 to 8.53. We'll put the CrowdStrike numbers up. Here's CrowdStrike. They're actually falling down a little bit though, but we'll put these numbers. There's Salesforce. So they are dropping on good results. Again, EPS beat, raised guidance, sales beat. Surprised they're dropping, to be honest, because they beat on EPS, beat on sales, and raised their guidance. So that's very strange. CrowdStrike is now out with their numbers too. CrowdStrike is down to 150s right now in after hours. 150s for CrowdStrike. So CrowdStrike dipping down pretty fast right now too. Again, Salesforce beat EPS, beat sales, raised guidance. CrowdStrike posted first quarter EPS of 57 cents, or adjusted EPS of 57 cents versus 51 cents expected, so better than expected EPS. Sales of 692 beat the estimates as well. We'll put up CrowdStrike numbers here. They're down a lot as well. So we'll put this number up on screen with Salesforce. this point, we got to just kind of wait for AI to come out. Nordstrom dropped their numbers as well. Chewy is performing solid. Chewy is all the way up to 3180s right now for Chewy, 3180s. Chewy posted, I don't know what Chewy's were, but it looks like they were good. AI is supposed to drop theirs at 4:15, so in about 8 minutes is what they're scheduled to drop. You'll see it when it, you'll see the stock move when it comes out. Like when the numbers come out, you'll see it move, So like, again, here's AI right here. You'll see it move a lot when the numbers come out. Chewy posted 20 cents a share EPS versus 4-cent loss per share estimates. Sales of 2.78 billion beat the 2.73 billion estimates. We'll put this up in the chat. Hey, what's up, Sandy? Hey, thank you. Again, Salesforce dipping down a little bit. I don't know if it's probably just sympathy with tech. I don't think their numbers are actually out. I think this is probably just bad sympathy from other tech stocks getting weak today. So I don't think this is the actual earnings for AI. They're not scheduled to drop for another 8 minutes or so. But they are dipping down to $39 a share here in after hours for AI. Look at this drop. So kind of a breakdown in a lot of stuff. CrowdStrike down pretty big. CRM down pretty big. Other tech stocks reacting negatively to earnings here. I think a lot of people are starting to prep for that. And C3 is down to $38 a share. Pretty big dip ahead of earnings. Wow, look at this drop. Down to 37s. So I don't think their actual numbers are out unless I'm missing them here. I think this is just sympathy for C3. C3 is under 38 at 37s right now, starting to bounce up a little bit. I don't think AI is out with their numbers. I think they're just moving down with other tech stocks that are reacting pretty negatively. Again, CRM, CrowdStrike, both, did well. They both posted beats on everything, beat on EPS, beat on sales. I know Salesforce raised guidance too, but for whatever reason, they're not reacting the best. And so tech is going down on this news. Yeah. Tech reacting negatively. But yeah, no numbers are out yet. Yeah, I don't know, Lila. Yeah, if they were out, we're gonna. I don't know if it'd be 40%, but we'd have a much bigger move than we have now if they were out with their numbers yet already. Yeah, we'll see if the debt deal gets signed. CRM actually rebounding some though. So there's CrowdStrike. Here's CRM. So CRM bounced back a little bit here. We still got AI consolidating. AI is not scheduled to release theirs for another 4.5 minutes. Yeah, we'll see if they get the debt deal signed. Yeah, and remember, C3 is not scheduled to release theirs until 4:15, so we still got about 4 minutes. Yeah, and we got 4 minutes. Bouncing up a little bit for C3, up to 37 almost right now at 36.60s, 36.70s. We'll see if they hold. Again, we're watching CRM, CrowdStrike. CrowdStrike dropped big, man, all the way down to $140 a share. That's a big drop for CrowdStrike, man. That's not a small drop at all, man. That's a big drop here. Again, we'll see. If the debt ceiling don't pass, will SoFi flush? I don't think SoFi is going to react super heavily to what they do on the debt ceiling. I think it's more so going to affect blue chips like Apple, Amazon, Walmart, Tesla, stuff like that. It's going to affect blue chips more than SoFi, which is kind of a mid-cap stock. So we're back up to 37.50 or so right now for AI here, 37.50. Scheduled to drop theirs in 3 minutes for AI, 3 minutes before the drop. Well, the earnings call is at 5 p.m., Evan. But the earnings report's released in about 3 minutes. So the way it works is, just for those at home, is they'll release the earnings numbers. So they'll release the report, usually right at the closing bell at like 4, sometimes it's 4:15 like today for AI, and then like 30, 40 minutes, an hour later, they'll do the actual call. Yeah, Jeffrey, that's, you know how people do, man. Again, I'm not a big person to buy up a lot of options ahead of earnings. I think that's a gamble for sure. But you know, people, man, they like the rush, you know. CrowdStrike bouncing back a little bit here. Still waiting for AI numbers to come out. Yeah, the risk with options is you know, you might get a good reaction short term, but you can't sell it until tomorrow morning at the opening bell. That's a big risk for me. You know, it's something that I usually try to avoid. If I can't get out, if I can't get out liquid, exit, then I don't want to buy it right now. Yeah, CRM's already out. You can see the numbers right here on the bottom. What does the actual call mean in this case? So they drop an earnings report, and the earnings report details what their actual numbers are. And then a lot of the time they will do and then usually what happens is afterwards they'll do a call where the main reason for the call is to let investors ask questions. And so they'll do an earnings call. Sometimes the CEO will host it. So like if it's Tesla, Elon will host it. If it's, you know, Apple, Cook will host it, or whoever, or maybe I'm getting my CEOs off, but they let the CEO host it, and then they'll let investors ask questions is basically what it is. The earnings call is going to be, and again, hit the subscribe button, guys. We cover all the big stuff, all the big reports, all the big earnings, all the big releases. We cover all the economic data, big earnings reports, calls, market news, all for free. We don't sell a course, don't sell a service ourselves, don't claim to be experts. I don't even claim to be a good trader. I think I'm a good trader though, but hit the subscribe button, guys. You know you want to. Yeah, kind of like a press release following it. I mean, no offense, Leela, but I don't know if I've ever seen you before. So, I mean, shout out to you, I guess, but I don't think I've ever seen you before. What is your broker that I'm using? This is Thinkorswim, TOS. All right, so we got a little pop on AI here. We got a little pop. Numbers are supposed to come out in about 10 minutes or 10 seconds, but we did get a little pop. Let's see if this is from the numbers actually coming out. Let's see. Again, AI popped. I don't think the numbers are out yet. I don't see them at least. They popped and then they came right back down. This isn't really an earnings type of move yet, though. So there's 4:15, which is when they were scheduled to release. But I don't know if the numbers are actually out yet. Yeah, I don't think the numbers are out yet, but we're watching for them here, team. So just bear with me. Pun intended, I guess. We got a little upwick or downwick. $37 a share for AI. Again, AI is expecting right here. Again, AI is expecting 18-cent loss per share on 71.3 million in sales revenue. We're still at 37. It doesn't look like they've released their numbers yet. All right, still waiting for the numbers to come out here, team. Bear with me. All right, so no reaction right here, man. So the numbers are supposed to come out, but no reaction here. CrowdStrike tried to bounce up a little bit. Disney's starting to move up a little bit too, but they're trying right now, team. They're trying, but nothing out yet. Again, stick around. I mean, you'll see a move. The reason I know they're not out yet is because they haven't moved at all. You know, when earnings come out, like for instance, look at CRM. Look at this huge move from 230s down to 212s. So like when earnings drop, you'll see the reaction in the move in the stock price. That's how we know they're not out yet. So they're just late. They're late. CrowdStrike bounced back a little bit here. Here's CRM. At 144s right now, 144s. Late is not a good sign. Yeah, I don't know how good this is. Okay, there's a pop up to 39s here. It's not a huge move for earnings, like earnings are out or anything, but we did get a pop up. There's 39.30s. Not really the big, huge upwick, downwick type of candle that I'm used to seeing for earnings, but hey, maybe they're good. But I don't see the numbers out yet, though. We're up to 39.50s. Testing the VWAP right now. The volume's still pretty light for an earnings release. All right, up to 40s. Up to 40s. 40.2 right now for C3. Nothing out yet, guys. Do y'all know? I mean, we're getting upward movement, but it's not really the type of earnings move that we're used to seeing here. Let me look up. It's moving a little bit, but the earnings aren't out yet. I'm looking at everywhere. Can't see it. Everybody's kind of waiting. Up to 41s right now. I mean, we got 3 pretty big green candles so far, but I don't see any earnings are actually out yet. I'm checking everywhere, but nothing, which is weird. So they're late, but the stock is running despite all this. It's up to 41 plus right now. 41 plus. 41.50s. Almost up to 42s. I mean, hey. Waiting patiently. There's 42s. Market's already closed, Panda. Yeah, hit the live button next to the play button, man, and you'll catch it. All right, so AI is popping up a little bit. There's CrowdStrike. Here's CRM, Salesforce. Again, very, this is the type of earnings reaction I'm used to seeing here. So CRM reacted pretty heavy to all this. Watching volume here. Volume's still, you know, not bad, but yeah, I mean, Lila, you can say whatever you want, but I've never seen you before, and so it's kind of strange. You know, I don't know if you're somebody that's been banned before and you seem, you know, there's some signs that you might be. Maybe I'm wrong though. I appreciate the support if you're not, you know. AI starting to pull back. It's at 39s. 39s. And maybe I'm getting you mixed up with somebody else. If I am, sorry. Yeah, the earnings are supposed to come out at 4:15, but so they are effectively 6 minutes late at this point in time. 6 minutes late. All right, so AI coming right back down to $38 a share here. We got a little bit under 1,000 people here. I'm waiting for the numbers to come out. I don't see anything here yet. Hey, what's up, boss? Again, we're waiting, but nothing out yet. Starting to get some big candles, but no actual numbers here. So the earnings call is at 5 p.m., guys. Earnings call is at 5 p.m. Earnings are supposed to come out at 4:15 Eastern time, 15 minutes after the closing bell. You know, now maybe they drop at 5, but the actual earnings call is supposed to start at 5. So we got time. Hey, let's see if we can get some action today, man. What's Nvidia doing right now? So there's CRM, negative reaction to earnings. There's Nvidia. We also had CrowdStrike, very negative reaction to earnings. AI, we're just kind of sitting tight here. And again, here's AI's 10-day chart. Very strong, from 22s up to $40, basically where it is now. Here's the 20-day chart, even stronger, from 1670 at lows to $47 at one point in time. So, you know, 300% moves in 20 days. That's a crazy big run. Now y'all are confusing me, man. Let me sign up for this. So 531. Here, now I'm gonna go ahead and schedule. Yeah, the earnings call is definitely not live right now. It's definitely not live. So we just joined the earnings call. You can hear the hold music. It's not live yet. It's still on hold. It's scheduled to start at 5 o'clock market time, so in about 35 minutes. So the way it works, guys, we get a lot of people that don't know how earnings work. And so I'll explain it here, okay? When earnings typically come out for any stock, what they typically do is they release the earnings after the closing bell at 4 p.m. So at 4 p.m. they release the numbers, so to speak. So the base two are EPS and revenue. EPS is profitability, it's their margins, it's how profitable the company is. Making more money per share means the company was more profitable. Making less money per share means the company was less profitable than expected, or whatever it is, right? And then sales or revenue, which are same thing, they obviously dictate what the potential is, what the ceiling is for that specific company, because a company can have, you know, great revenue. They can have great, you know, they can be bringing in a lot of money, but if they're not actually profitable, it doesn't matter much. So those are the two metrics, again, revenue and sales, or sales revenue and EPS, which is profitability, right? Yeah, the other big release that they'll put out in earnings is guidance numbers. And so when you're looking at the actual numbers that are released, you'll see C's. So if it's Apple will say Apple sees X for the quarter one, which means that this is their guidance projections, like what they think is going to happen for the first quarter. And guidance will arguably move the stock more than any other metric in earnings, because again, it's future projections versus past, you know, results. And so again, at 4 o'clock or sometime around 4 o'clock today, it was at like, or today it was scheduled for 4:15, but again, they haven't released theirs yet for C3.AI. It was scheduled for 4:15, but they're not out yet. Again, after the closing bell, at some point they'll release their earnings, and then about an hour later, anywhere between like 5, sometimes it's 5:30, depending on where the company is located, they'll do the actual call, and the call will be a lot of the time hosted by the CEO. The CEO will a lot of the time host the call, and then they'll also open it up to investor and analyst questions. So they'll let investors, they'll let analysts, they'll let, you know, news, you know, sources and stuff like that come on the call, ask the CEO or you know, a high level executive, whomever he or she is, and they'll let them ask questions, right? That is the earnings call, okay? But there's there's the earnings release, again, sometime after 4 p.m., and then there's the earnings call, which is about an hour later. Today, that is at 5 p.m. That is in about 35 minutes. And again, they are late. They were scheduled to release theirs at 4:15. They never released theirs. The earnings report was supposed to come out at 4:15. They're not out with theirs yet. And then the call is scheduled. And again, I'm waiting on hold on the call right now. And we're going to stream the full call live so you can watch all of it. That is scheduled for 5 p.m. But that is basically earnings breakdown. Paul, I haven't even opened my Discord yet, brother. But yeah. Again, AI dipping down to 38s. Again, still waiting here, guys. Still waiting. Again, I use Earnings Whisperer. You could use like Benzinga or something like that. So you can use those numbers. Also, guys, check out TopStep, man. TopStep, they just upped it to where if you're profitable, you can keep your first $10,000 in profit. And so what TopStep is a funded account program. It's really good if you don't have a ton of equity. A lot of people want to day trade, but they just don't have the equity to get around the PDT rule. The futures market, there's no PDT restrictions. You can day trade the NASDAQ. You can day trade the S&P 500 and what's called the NQ or the E-mini. You can day trade currencies. You can day trade gold, silver, commodities, whatever you want to trade. You can trade it in futures for the most part. You want to check their symbols, but yeah, you can day trade futures with no PDT rule. And TopStep funds traders, they give you a demo. They give you a profit target and a max loss. And if you can pass their testing, base one's 50K. They give you a 3K profit target, a $2,000 max loss, and a couple other rules. If you can pass their testing, they fund you 50 grand with a 90% split. And again, you get to keep $10,000 of your first profit before you even have to share any of your profit with them. And so it really is a good way to test your skill. Just taking the challenge is going to build you into a better trader. If you lose, you have much less risk than you would if you put the money up yourself. If you pass it, again, you still get to keep at least $5,000 to $10,000 of your first profit. You get 90% of your profit after that. And so it really is the best of both worlds. If you really want to try day trading with less risk, try out TopStep. Most people are going to fail these challenges, and they're a sponsor of mine. And so they pay me money, and I'm biased in their favor for sure. But it really is a less risk, a more risk averse way to day trade and try, And so check them out. I wish I had something like that in the beginning. Hey, nice, Mike. All right, so AI started to pop up a little bit at 39.40s. Thank you, Lance. I appreciate it, bro. Thank you, man. Yeah, let's not talk bad about my sponsors. If you do, you'll get banned, man. Just a heads up. Again, people who lose on these call them scams, but the reality of it is they pay out 100%. Like they're gonna pay you out. If you pass the testing, you pay you out, and it's so much cheaper to lose on TopStep if you do lose than put the money up yourself. And if you pass it, you get a lot of the benefits. So I mean, again, most people just lose and they can't get funded, and so they call it a scam. But yeah, no numbers are out. We're up to $41 for AI. Still waiting. Hey, I appreciate you becoming a member, Lance. Thank you, brother. Can someone explain how people trade after hours? Well, you got to use EXT orders and limit orders. You can't use market orders. You can't buy market, sell market in after hours. You have to use limit orders. I use Earnings Whisper is what I use, but there's a ton of different ones, man. And again, I'm always honest with people. I tell people like TopStep is a sponsor of mine. I'm biased for sure because they pay me money, but I think they lay out their rules. Their rules are simple. I think they're reasonable expectations for anybody funding you money, and I think it just I think most people are going to lose because most day traders lose money. It doesn't matter if they're on TopStep or if they're somewhere else. Most day traders are going to lose, but it's a lot cheaper to lose the 130 something bucks combined than it is to put up 15,000 yourself and lose thousands of dollars trying it yourself. So in that regard, some paper trading accounts cost $100 or $115, and they're just paper accounts. And so like people can call them a scam because they can't pass them, but like, I think that's just because they can't pass them. Anyways, AI still hasn't dropped theirs yet, man. Maybe they're waiting for the full earnings call to release their numbers. We got 30 minutes until their numbers come out. Yeah, I'm not sure why they're this late. Free speech. Look, y'all can say whatever y'all want. This is my own personal YouTube channel. I can ban you guys if I want to as well. Free speech doesn't have anything to do with it, man. I always laugh. Like people say free speech. That's a hilarious argument. Because in the end, it's my channel. I can, ban somebody if I want. And again, you got to understand, again, I'm not going to ban somebody for being critical. I didn't ban him. But if somebody just sits around and every time I plug a sponsor, they criticize them, that's when they'll get banned, But free speech doesn't have anything to do with it, man. Again, here's an example. People could say, oh, free speech. But if it's a private company, they can do whatever they want. You know, you can say whatever you want, but there's consequences to that. And that's, you got to let them act freely as well. So, yeah, freedom. No, we're waiting for the numbers to come out here. We're waiting for the numbers. Again, AI's late here. AI's late. Yeah. All right, so starting to break down. We're at $37 right now, 37 bucks. Yeah, I don't know, man. They might announce the sub. Hey, thank you, Emin. New sub here. It's nice to see you care for your channel and sponsors like that. Yeah, I mean, again, I mean, I'm going to be the most reasonable with plugs and sponsors. I every time I plug anything, I always say, hey, I'm biased in their favor because they pay me money. I don't think there's any other YouTuber that does that. I don't think there's any other YouTube. Anytime I plug anything, I'm going to say, yo, they pay me money. I'm biased in their favor. And I do it every time, you know. But again, aside from that, I don't sell a course. I don't act like an expert. I don't even claim to be a good trader. I just give people market data fast. Like, I just report data quickly. As fast as I can. That's why people sub to this channel, is because we drop the data quick relative to everybody else for the most part. C3 starting to break down. It's at 35 bucks. Still no numbers out yet. Hey, my guy Bernardo, thank you, brother. I appreciate it. Yeah. Again, we're still at 36 here. AI breaking down to 37s, but still trying here. Again, no nothing out yet. Still waiting. Again, the actual earnings call is supposed to start in 25 minutes, so maybe they're waiting for the earnings call to drop their numbers. I don't know, but they're very late. They're later than most of them. Why didn't I get any notification that you were live? I don't know. Hit the notification bell, brother. It's okay. We all degens. Hey, you know that's right. You have to disclose sponsors legally, don't you? Yeah, we disclose them, but I could just put something in the description that says, hey, I'm going to plug sponsors. Which is what most people do. I choose to just straight up tell people. Like you can see in my description, we are not market professionals and are not liable. Some of the links included are affiliate and referral links. Everything we put out is for entertainment purposes. So I mean, that's all the disclosure I really need. But yeah. Hey, but thank you, Bernardo. I appreciate the donation, brother. Thank you, man. Yeah, for sure, Car. 100%, dude. Again, waiting for AI here, man. It's breaking down to 36. Hey, thank you, Doctor. You're the fastest data dropper. Definitely top 3 fastest data droppers in the world right now, for sure. Definitely top 3. I don't know, man. AI is struggling to release, man. Again, I don't know what's going on. Again, their numbers are actually coming out there. We know at the very least we're going to get the earnings call at 5 in about 25 minutes, but I don't know what's going on until then, man. They're just late. The last one that was this late was Nvidia, and then they did crazy good. So if you guys remember, Nvidia was late the last release, I believe, and then they did crazy good. So you can use up to 20 different platforms, Christian. So I mean, you can use up to like 20 different platforms. I'm not bearish on AI. I love AI, bro. I've been pushing AI for like 6 months, dude. A lot of people told me that AI was just hype and that it was just buzzwords and stuff like that. And I told them, I was like, dude, like I said, I'm not claiming to be the greatest programmer ever, but I do a little bit of software development with like JavaScript and React Native mobile development and stuff like that. As a software developer, AI is completely game changing. It makes productivity increase tenfold. You know, that's why I knew AI was going to be big. And I've been talking about this for like, you know, a year now. Maybe not quite a year, but yeah, I've always been a believer in AI. I thought it was going to change the game. I even got headshots for real estate, and they are AI headshots if you guys want to see them. So no, it's not CFDs. Hey, what's up, Tony? 13-cent EPS. Yeah, I mean, I'm looking, but all right, so here's their numbers. All right, so finally they're out with theirs. See if I can find the actual numbers here. All right, they came in for the fiscal year 24 to quarter one. 70 to 70. No, that's not right. That's the year. I don't want to know the year. I want to know the actual EPS numbers here, bro. Revenue was, no, that's for the quarter. Like finding a needle in the haystack with some of these, man. All right, so they're down to $35 a share. All right, so the earnings are out. You can see the earnings right here. Again, here's their earnings. The call starts soon. Looks like the market's not really liking it. Closed 126 deals during the fiscal year 23. 71 were partners. They're just late on reporting these, I guess. But yeah, this was a weird release. This was a quiet one, man. Air Force designates C3 predictive maintenance solution a system of record. Here's new products. They got generative AI product suite. And we're going to go over this during the actual report. Total revenue for the fiscal year 24 to quarter one was 70 to 72.5 million. So maybe this is guidance. So these are guidance numbers. Fiscal year 24 guidance projections at 295 to 320 million. Year-over-year growth for the fiscal year of 24 is 11 to 20%. Non-GAAP loss from operations is scheduled to come in at 50 to 75 million. So here's for the quarter four. Revenue came in at 72.4 million versus 71.32 million estimate. So higher than expected revenue. They came in loss per share of 13-cent loss per share. They expected 18-cent loss per share. They showed the 13-cent loss per share. So that is basically what happened. So again, they beat on EPS. They beat on sales. Their guidance numbers, I don't know what the guidance projections were, but their guidance numbers came in at total revenue guidance was 295 to 320 million. Year-over-year growth 11 to 20% for fiscal year of 24. And so, yeah, we'll see. But it looks like they beat on EPS, beat on sales. I don't know what they did for their guidance, but the market's not really loving it. They're dropping down. They're at $35 a share right now is what it looks like to me. Yeah, if you guys want this report, I'll post it right here. It's a file. So here's the report. I'll also put it in the description if you guys want it. But yeah, very quiet release, man. Most of the time, usually, this is from the C3 website. But yeah, usually we're going to get a bigger reaction to this, and we just didn't here. So. All right, so again, EPS, we'll put this number up on screen so we can see it. Again, revenue came in. Let me write this out. $72.4 million versus again, we're gonna stream the full call versus 71.32 million estimates. Again, we're gonna stream the full call. EPS came in at 13-cent loss per share. Revenue of 72 point. All right, so full call. All right, so here is the numbers for C3, but yeah, they beat on EPS, beat on sales. I don't know why they're dropping so much, but they beat on EPS, beat on sales. Here's the number right here. They guided lower. Yeah, I think that's why. I don't know what their guidance. I see what their guidance was. And again, I put the docket in the description if you want it. You can see the guidance here. 70 to 72.5 million. Fiscal year next year at 295 to 320 million. Year-over-year growth, they're projecting 11 to 20%. Yeah, we'll see what the earnings call states. Maybe they'll have some good stuff for earnings in their actual earnings call. We'll see. Still got about 16, 17 minutes before that drops. They didn't really react super negatively to this, though. Like, it wasn't like a huge negative reaction or anything like that. So, yeah. Yeah, they beat. They expected. Yeah, let me put up what the expected numbers. So the expected numbers for C3. I see the earnings call starts at 5 p.m. But yeah, they expected initially 18-cent loss per share. So let me put that up on screen so people can catch it. Here's that list. Yeah, but they did 13-cent loss per share. So a little bit, they lost a little bit less than expected. Yeah, I mean, long term might make sense. You know. Yeah, Chewy flew up after the numbers too. So yeah, Chewy flew up. CrowdStrike did pretty rough too. So tech started to do pretty rough leading into everything, for sure. Like tech started to struggle after CrowdStrike CRM numbers all came in better than expected. Like if you look at CrowdStrike did good. You know, unless it's guidance related, CrowdStrike beat EPS, beat sales, gave back a lot of the gains it made earlier. CRW, or no, that's CRM. So Salesforce did good for their report. I don't know what their guidance numbers was. Maybe that affected it. CrowdStrike did really bad. So CrowdStrike dropped from like 162s down to 140. Very big percentage drop here for CrowdStrike. AI starting to bounce up a little bit. It's at 35. AI hasn't really moved down that much. It's slightly red, but again, I think you got to look at the long-term chart for AI here. If you look at AI chart, if you look at it like a 20-day chart, it's still up a ton over the last 20 days. So yeah, we'll close this poll out. We got about 1,000 votes or so. 59% think they're going to beat. And they did beat. You know, they just reacted negatively from it. Hey, thank you, Puts. Good luck, Kendall, with the G-Wagon. G-Wagons are fun. Just remember, man, I'll say this. And I have a, you know, I'm not going to be too specific, but yeah, I'm not going to be specific about what I drive. But again, just make sure you got it to you really got enough of money to afford it. Remember, a car is a depreciating asset. So even if you have enough to buy it, it still doesn't mean it's a good purchase. The only justifiable thing is if you run a business and you can write it off. That's a different story completely. But that's only a super specific situation. All right, guys, we got 13 minutes. It's from the C3 website. And again, if it's not their earnings, then they're just really late. But it is from the C3 website. Again, what this was specifically here, guys, this is from investor relations C3.AI. So like here's the C3.AI website. You go down to investor relations. Here is for the AI fourth quarter 23 press conference. So here's today. You can see April 31st or May 31st at 5 o'clock Eastern time. You click on that. And yeah, I don't know. Financials, maybe quarterly results. Maybe they're not out. Earnings presentation. So yeah, here's, I know that's 23. Yeah, I don't know. Maybe y'all are right. Let me see. Let me make sure it's not the same one. You might be right, but I guess the point is if this isn't their earnings, then what are? Yeah, I guess y'all are right. Wait, let me see. What did I say? No, this is different than what I had. Yeah, this is different than what I had. So no, it's not the same. No, it's not the same. Yeah, I don't know. I'm assuming it's right, but again, I can't be for sure. I saw it on Twitter. Somebody put it on Twitter. But again, if this isn't right, then what are the actual numbers here? You know, it's the real question. And I don't see anybody else. Again, I'll put this up. I'll just to clarify for clarification purposes. I'll put potential numbers at the beginning of this because again, I really don't know. There's been no official announcement. Potential numbers in front of it, but I really don't know. If that's not the release, then what is? Yeah, well, no, the numbers are out. Yeah, I mean, I can see what I released here. Here, let me look at what this is titled. Yeah, this is today. Yeah, this is today. So this is the release. All right, so look at the date. May 31st, 2023. So this is for today. This is the supplemental file. Yeah, so this is right. I mean, the numbers were good. If this is correct, again, which I'm assuming it is. Again, it has today's date on it, May 31st. Again, as a programmer, they probably just back tested one of the domain / addresses. They probably found it like by looking at what the old one was and maybe guessing the code or something, but I don't know. Twitter's usually pretty reliable in terms of like fast releases. And again, it shows this was right. This is the correct date, and it's from it is from their website, guys. It's investorrelations.c3.ai, dated today. So I'm pretty sure this is right. But again, I'll put the number up there at the bottom just in case. But yeah, pretty sure this is right. Yeah, that's what we have up. That's what we have up. 13-cent loss per share. 72.4 million. Yeah. So they're already out with their numbers. Again, they beat on EPS, beat on sales. A lot of people are saying that they're down because of bad guidance numbers. Not 100% sure, but that's what they're saying. I don't know. Tesla up to 203s. I don't know why Tesla's up so much. All right, guys, 8 minutes here before the actual earnings call. 8 minutes. We're still waiting on the call here for the numbers to come out. patiently waiting. All right, guys. Bouncing up a little bit for C3, up to 35.50s. But yeah, I'm pretty sure these are right. All right, so Elon is going to show off, reportedly, the new Model 3 when he tours the plant in Shanghai on Thursday, according to Yahoo Finance. Yeah, and if you want to see AI here, guys, we showed this before. Here's AI headshots. So these are headshots that I never actually went there in person. I never actually showed up there in person. I never actually went and took pictures or anything like that. I just kind of... let me see if there's some other ones. I just kind of downloaded them and paid AI software $20, you know, to do it. So I mean, hey, I got them somewhere. Hold on, let me find them. Here's one of them. So I never actually took this picture. It doesn't quite look like me. Something's a little bit off. I kind of look like Jack in Titanic, but like, hey, I'd rather do that than go take actual pictures and stand up and get dressed. I don't own this suit. You know, this is just some random suit they decided to throw me in. So, I mean, hey. I don't know what I did with the rest of my headshots. They're somewhere here. But... what is up on my screen that's making it blip like that? But yeah, so point is, AI is getting really good. AI is getting really good. Oh, here they are. Look at the headshots. This one still doesn't quite look like me. I don't know what they did with my beard, but they're different. But like, I never wore this suit. I never wore this suit. I never took this picture. You know, they're a little off. They needed to shave my beard, bro. But like, hey, they gave me kind of red hair. I look Irish. That's all right. You know. But yeah. They gave me the beard, but they didn't shave the beard at all. Is the problem, you know. But hey, I'll take them. John, financial advisor. But hey, listen, $20, bro. I'm not gonna listen. I don't own this suit, dude. I'm not gonna go pay for that suit. I look like Prince Harry. I do, don't I? I do look like Prince Harry. Listen, they can call me, man. Listen, maybe I'm some distant relative of them. They need to holler at me. My last name is London as well. My last name is London. London. You know, listen. Let me give them a call now. Yeah. Luck of the Irish, maybe. All right, guys. Earnings call starts in about 3.5 minutes. 3.5 minutes before the actual earnings call starts. Yeah, honestly, listen. It's better than me going pay. My problem is I have like curly hair. You know, so it's really hard for like things to get right because my hair is like actually really, really curly. But hey, $30. There's some other ones that were better, but hey. These are real estate. These are real estate headshots. Bro, people already knew my last name, Adam. I'm not about to tell them my B-day or my mother's maiden name or anything like that. But again, numbers drop in about 3 minutes, guys. 3 minutes. Still waiting. About 2.5 minutes. But the earnings call is supposed to start about 2.5 minutes. We'll see. Definitely one of the 3 most handsome fellows I've ever seen. Thank you, Sandy. I appreciate that. Definitely top 3 most handsome, Prince Harry lookalike traders in the world right now for sure. Again, AI at 34. 60s right now, consolidating at the bottom of the range. The numbers are apparently out, but there's a lot of arguments about whether they are or not. We reported the numbers. We're waiting for the actual call to start. Where are C3 earnings? They might be underneath me right here. For everybody complaining like I'm not reporting the numbers, look, they might be all right here. I'm just a weatherman this. They could be right here, where it says potential numbers for C3. They might be right there. They could be. I'm not saying they are. I'm not saying they're covering my face right now, so you can't fully see my face, but they might be currently. Okay. Again, 13-cent per share EPS loss on 18-cent estimates. Revenue of 72.4 versus 71.32 estimates. A lot of people don't understand what an earnings call is, and they're acting like I'm late or something, and like everybody's already seen the numbers. Yeah. Sheesh, man. I'll move the potential numbers so far. I'm going to just put this out right there. There we go. All right, guys. We got about a minute left. Again, hit the subscribe button. Make sure you hit the live button next to the play button. Yeah, I don't know. This is their domain. Listen, what I will say is for all the people telling me I've got wrong numbers or whatever it is, again, the earnings call will tell us. I expect full apologies from you guys when the earnings call starts in about 40 seconds and they say, hey, our EPS was minus 13 cents a share. Our revenue came in at 72.4 million. I expect full apologies afterwards. Everybody's saying I'm wrong. Okay. And if I'm wrong, I will eat my words. Absolutely. Definitely the top 3 most wrong earnings reporters in the world for sure. But like, hey, we do what we can. I used a couple different ones. Headshot Pro, I think, is one I used. And then I used Try It on AI as well. All right, guys. Earning call starts in 10 seconds. Y'all can hear the music, correct? Just want to make sure y'all can hear this. Yes, I believe they are out with their earnings. Their earnings might be right here underneath me. They might be right here. Yeah, I don't know why they're dropping. I guess from guidance. But yeah, can y'all hear the music? You should be able to. Again, here goes the actual call. I'm going to mute this and wait for the full call to start. All right, so they're still waiting on hold. Well, I'm going to stop this, and then we're going to share the audio again just to make sure that it works. Yeah, I don't know what's up with their earnings here. I don't know if they were trying to wait for their release to come out or what it is, or somehow I got it early, or sometime maybe I got it wrong. I don't freaking know. If the earnings are a beat, I think the earnings were a beat. They came in at 13-cent loss per share versus 18-cent loss estimates, revenue of 72.4 versus 71.32 million. Again, people saying I'm wrong here with this. People saying that this is not accurate. My only question is then why does it have oh wait, this is wrong. Okay, that was actually the wrong one. All right. The one I've got in the description is the right one. Okay. So if people are saying this one that I have in my description is wrong. All right. If I'm wrong here and these numbers are not up right, why do they have today's date on them? Again, we're still waiting for the earnings call to start. It hasn't started yet. They got bad hold music playing. But if this isn't the right numbers, why do they have today's date on them? Why are they coming for the investor relations C3 website and they have May 31st, 2023 on them? Coming from the investor relations C3.AI website. If these are wrong, explain that to me. Chat GPT made it. I don't know. Yeah, I don't know. Everybody's telling me I'm wrong. Maybe I am. I don't freaking know, dude, at this point in time. All right. All right. They're late on their earnings calls. Shock. Yeah, I can look at the URL. It's the Investor Relations C3 website. That's what I'm saying. It has today's date on it. It says Investor Supplemental. My guess is somebody got into it early, and so they didn't do a hard release. But again, if I'm right, I expect full apologies. My guess is I'll just hear crickets. But we try over here. Yeah, again, even freaking TOS has the report out. So again, even Thinkorswim has the report right here. 17-cent loss or 13-cent loss per share on 17-cent estimates. Yeah, I have it right. Yeah, they're still late. Again, don't get mad at me if I said maybe. I posted the numbers and then a bunch of people came in here telling me my numbers were wrong. And so I put out a preface of maybe. All right, here's the earnings call, guys.
Good afternoon, and
Yeah, there we
welcome
go.
to
Sound check.
C3.AI's earnings call for the fourth quarter fiscal year 2023, which ended on April 30th, 2023. My name is Amit Berry, and I lead investor relations at C3.AI. With me on the call today is Tom Siebel, Chairman and Chief Executive Officer, and Juho Parkkinen, Chief Financial Officer. After market close today, we issued a press release with details regarding our fourth quarter results, as well as a supplemental of our results, both of which can be accessed through the investor relations section of our website at ir.c3.ai. This call is being webcast, and a replay will be available on our IR website following the conclusion of the call. During today, related to our business that may be considered forward-looking under federal securities laws. These statements reflect our views only as of today and should not be considered representative of our views as of any subsequent date. We disclaim any obligation to update any forward-looking statements or outlook. These statements are subject to a variety of risks and uncertainties that could cause the actual results to differ materially from expectations. For a further discussion on the material risks and other important factors that could affect our actual results, please refer to our filings with the SEC. All figures will be discussed on a non-GAAP basis unless otherwise noted. Also, during the course of today's call, we will refer to certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in our press release. Finally, at times in our prepared remarks in response to we may or may not continue to provide this additional detail in the future. And with that, let me turn the call over to Tom.
Thank you, Amit. Good afternoon, everyone, and thank you for joining our call today. We finished the fourth quarter strong, and the coming year looks stronger. I believe that it's generally agreed that the overall market for enterprise AI now appears substantially larger and is growing at a much greater rate than most analysts and experts predicted. We have been working since 2009 to develop product leadership and establish thought leadership in enterprise AI, assisting private and public sector enterprises to apply AI to improve operational processes. C3.AI has been at the vanguard of enterprise AI, of the enterprise AI market for over a decade. As the market has developed from its roots in IoT to supervised learning, unsupervised learning, NLP, deep learning, reinforcement learning, and now generative AI. In the past 14 years, we have developed and enhanced the C3.AI platform and now offer over 40 enterprise AI applications developed with that platform that allow our customers to rapidly take advantage of AI to improve their business processes. We have been communicating for over a decade that we believe that the market for enterprise AI solutions would be quite large. And now, as we enter the summer of 2023, it has become a dominant theme in technology discussions. AI has become a dominant theme in technology discussions, government discussions, media reports, defense and intelligence imperatives, and government and business imperatives. I do not believe that it's an overstatement to say that there is no technology leader, no business leader, and no government leader who is not thinking about AI daily. AI chip makers like Nvidia are accelerating production to try to keep up with the very real demand that's out there. And all of this is being accelerated by the advent of generative AI. The interest in AI and in applying AI to business and government processes has never been greater. Business inquiries are increasing, the opportunity pipeline is growing, demand is increasing. And C3.AI is well positioned to serve that increasing demand with our tried, tested, and proven AI platform, our applications, our global footprint, and our large global ecosystem. The world is, in many ways, now coming to us. The interest in applying AI to business processes is substantially greater than we have ever seen. In the fourth quarter, we increased our customer base, expanded our work with existing clients, and saw especially strong growth in our federal business. In the fourth quarter, our total revenue was $72.4 million. Our free cash flow was $16.3 million, and we ended the quarter with over $812 million in cash and cash equivalents. Importantly, we have a well-defined plan to be sustainably cash positive and non-GAAP profitable by the end of this fiscal year. For fiscal year 2024, for the fiscal year 2023, total revenue was $266.8 million, an increase of 5.6% over fiscal year 22. Subscription revenue was $230.4 million, representing an 11.4% increase over the prior year. Let's talk a little bit about the AI applications market. Now, as the enterprise AI market has developed, it appears that the bulk of the demand is increasingly for turnkey enterprise AI applications rather than for development tools. This thesis is supported by an evaluation of our bookings for the past fiscal year that indicates that 83% of our bookings were driven by application sales. 17% of our bookings were driven by the sales of the C3.AI platform. Importantly, we are seeing increasing diversity in the industries we serve. For fiscal year 23, an analysis of our bookings includes oil and gas was 34%, federal, defense, and aerospace was 29%, high-tech was 13%, energy and utilities 11%, manufacturing 4%, food processing 2%, chemicals 2%, life sciences 1.5%, and other industries made up the remaining 3%. An important leading indicator of our increasing industry diversity is evidenced by the trial and pilot agreements closed in Q4. Federal, defense, and aerospace made up almost 37%. Manufacturing comprised approximately 16%, and high-tech made up more than 10%. Oil and gas also made up more than 10%. When we look at ag, state and local, chemicals, energy, and financial services, each made up approximately 5% of our bookings. As a result of the increased demand for enterprise AI, helped by our transition to consumption-based pricing, we are seeing a substantial increase in opportunities and shorter sales cycles. In Q4, we closed 43 agreements, including 19 pilots that were initiated in the quarter. The number of qualified enterprise opportunities targeted for closure within 12 months in our sales pipeline has increased by more than 100% in the past year. During fiscal year 23, we closed 126 agreements, up from 83 in the prior year. The average sales cycle for new and expansion deals was 3.7 months, down from 5 months in Q4 of the previous year. An examination of the composition of our pilot account profile suggests there is significant opportunity for growth as these accounts convert to consumption pricing. Of the 19 pilot accounts signed in Q4, 7 were at accounts greater than $100 billion in revenue. 7 were at accounts between $10 billion and $100 billion in revenue. 4 were at accounts between $1 billion and $10 billion, and 1 was an account less than $100 million in annual revenue. In fiscal year 23, we expanded our application footprint with a number of our customers, including Shell, Koch Industries, the United States Air Force Rapid Sustainment Office, PwC, Ball, ExxonMobil, Con Edison, the Defense Counterintelligence and Security Agency, Baker Hughes, the New York Power Authority, Duke Energy, ATB in Canada, Defense Innovation Unit, Roche, Cargill, and Engie. We also established many new relationships during the year, including the Department of Defense Common DoD AI Office, Daly City, California, Dow, ExxonMobil, Flex, Hexagon, Nucor, Owens, Illinois, Pantaleon, Riverside County, California, Stark County, Ohio, TELUS, Department of Defense SOCOM, Department of Defense Transcom, and ESAD. Many of these also expanded their AI engagements with us in the course of the year. Let's address the C3.AI partner network. The C3.AI partner ecosystem is increasingly effective at opening new doors. With our partners, we're able to provide prospects the assurance of success and the highest quality service. In fiscal year 23, we closed 71 agreements with and through our partner network, including Google Cloud, AWS, Microsoft, Baker Hughes, and Booz Allen. C3.AI increased its qualified pipeline with AWS by over 24% in the fourth quarter, with particular focus on state and local government. With Google Cloud, our joint qualified 12-month opportunity pipeline grew from 25 opportunities at the end of fiscal year 22 to 140 opportunities at the end of fiscal year 23, a 460% increase. And importantly, we closed 10 new oil and gas accounts in the year with our strategic partner, Baker Hughes, with accounts including ExxonMobil, ADNOC, ENI, and others. In Q4, we released the C3 generative AI solution to the market. Our generative AI solution leverages the capabilities of the C3.AI platform and is distinguished from other GPT, LLM solutions in the market in several ways. Number one, it allows enterprises to access all their enterprise and open source data, ERP, CRMs, SCADA, text, PDFs, Excel, PowerPoint, sensor data, you name it. Secondly, importantly, it provides traceable, deterministic, consistent answers. Thirdly, it enforces the corporate information access controls and security protocols that are currently in place. Fourthly, it has no risk of IP or data exfiltration caused by the large language model. And importantly, it is hallucination free. So if the system doesn't know an answer, it doesn't fabricate it, which is clearly unacceptable for any commercial or serious government application. After releasing the product in March, we rapidly closed 3 generative AI applications in the quarter with large enterprises, including Georgia Pacific, Flint Hills Resources, and the U.S. Department of Defense Missile Defense Agency. We expect these applications to be live during this current quarter. We are currently working up quite substantial pipeline of additional C3 generative AI opportunities with large corporations. The C3.AI generative application is now available on both the AWS marketplace and the Google Cloud marketplace. It is difficult to estimate the size of the addressable market for these generative AI solutions, but it appears to be extraordinarily large. We saw a lot of momentum last year and in the fourth quarter with our U.S. federal business. The U.S. federal sector represented 29% of our bookings in fiscal year 23, and it continues to show significant strength. Our predictive maintenance solution, our predictive analytics and decision assistant, also known as Panda, has been in production use for several years at the United States Air Force Rapid Sustainment Office. And last quarter, it was selected as the system of record for all predictive maintenance for virtually all United States Air Force assets. Okay, this important designation expands our opportunity really substantially in the U.S. Air Force and other services. Let's talk about guidance. C3.AI has a consistent and solid track record of meeting or exceeding guidance, as we have done in every quarter since we've been public. Okay, and at this time, we are not inclined to pound on the table regarding guidance. In general, we feel comfortable with the expectations that the sell-side analysts have set for the coming year, and we are not inclined to change those expectations at this time. For Q1, fiscal year 24, we see revenue in the range of 70 to 72.5 million. For the full year of fiscal year 2024, we expect revenue to be in the range between 295 million and 320 million dollars. As it relates to non-GAAP loss from operations, we expect to fall between 25 million to 30 million in Q1 and 50 million to 70 million for the year. As we begin fiscal year 24, C3.AI has never been better positioned. The addressable market is large and expanding. The overall business environment for enterprise AI is strong, and C3.AI is front and center in the minds of CEOs and government leaders. Our balance sheet is strong, and with over $812 million in cash and cash equivalents, we are in a great position to expand market share. As the dynamics of the enterprise AI market are developing so rapidly, we thought it appropriate to host a mid-quarter Investor Day in New York City on June 22nd. At that time, we will provide C3.AI investors a company update, additional information about our product roadmap, product demonstrations, direct access to the C3.AI executive team, updates on our partner ecosystem, C3 generative AI demonstrations, and additional company developing news. Okay? We hope you can attend either in person or online, and that Investor Day event will be available to view online live, okay, for all investors via webcast. I will now turn this call over to my colleague, Juho Parkkinen, Chief Financial Officer, for additional details regarding our financial results. Juho.
Thank you, Tom. I will now provide a recap of our financial results, add some color to the drivers of our financials, provide more detail on our first quarter and full year fiscal 2024 guidance, and I will conclude with some additional color related to the consumption-based revenue model we introduced 3 quarters ago. All figures will be discussed on a non-GAAP basis unless otherwise noted. Overall, the business activity is higher than we have ever seen. Our sales reps are more engaged, there are more opportunities they're working on, and there are more interest from our prospects. During Q4, our ability to close agreements was more consistent throughout the quarter compared to prior quarters this fiscal year. We ended the fourth quarter with a total revenue of 72.4 million, of which subscription revenue was 78.5%. As we discussed last quarter, we expected professional services would be within our historical range of 10 to 20%, with our actual professional services coming in at 21.5% of the mix. Gross profit for the fourth quarter was 53.9 million, and our gross margin was 74.4%. We generated 27.1 million in positive operating cash flow and 16.3 million in free cash flow for the quarter. As mentioned during the prior updates, we have a short-term pressure on our gross margins due to a higher mix of pilots, which carry a higher cost of revenue than production deployment. Operating loss of 23.5 million was improved due to more rigorous expense management. As a reminder, though, the fourth quarter is when we host our C3.AI Transform customer event. As such, our marketing expenses ramped up to support the successful execution of that event. Operating loss margin was 32.5% in Q4, where the sequential increase was driven by our annual customer conference. For the full year fiscal 2023, our revenue was 266.8 million, an increase of 5.6% from fiscal 2022. Non-GAAP loss from operations was 68.1 million, and free cash flow was negative 187 million. Our gross margin for the year was 77%, Our subscription revenue was 86% of total revenue compared to 82% in fiscal 22. We ended fiscal 23 with $812.4 million in cash and investments. At the end of Q4, our accounts receivable, including unbilled receivables, was $134.6 million. Unbilled receivables at quarter end was $77.6 million, inclusive of $70.7 million related to Baker Hughes. During the quarter, we collected from Baker Hughes nearly $35 million. The general health of our accounts receivable is excellent. 76% of our receivables were current or less than 30 days past due. For the entirety of our FY23, our bad debt expense was approximately $300,000. Now turning to RPO and bookings. As consumption-based go-to-market model continues to pick up, RPO is a less important indicator of future performance. We reported GAAP RPO of $381.4 million, down 20% from last year, which is expected as a result of the transition to consumption-based pricing. Current GAAP RPO of $186.3 million is up 9.8% from last year end and up 5.7% on a sequential basis. We continue to see positive trends in pilot bookings diversity as we have sold pilots to a broad range of nine different industries during the quarter. Regarding our outlook for fiscal 24, we're guiding Q1 revenue to range between $70 to $72.5 million. For the full year 2024, we expect revenue to range between $295 and $320 million. As it relates to the full year, we finished the third quarter of our transition under the consumption pricing model. As originally modeled, we expect flatness and somewhat of a decline in revenue during the transition, with an acceleration as consumption starts to have a meaningful portion of our in-quarter revenue. As such, we expect the second half of FY24 to have higher growth rates on a sequential basis than the first half. We expect our non-GAAP loss from operations to range between $25 and $30 million for Q1, and for full fiscal 24, we expect non-GAAP loss from operations between $50 and $75 million. As a reminder, we expect to be non-GAAP profitable for Q4 24 and beyond, and as it relates to full fiscal 24, we are guiding to a range in operating loss due to the potential investments we may do for C3 generative AI applications. We expect our cash and investments to be at its lowest at around $700 million during fiscal 24. Turning to customer metrics. Historically, we have provided a quarterly customer count estimate as a proxy for the adoption of our products and solutions. However, due to the complexity of our contractual and pricing structures and the involvement of resellers, we believe comparing customer counts from quarter to quarter based on our current methodology. Customer counts from quarter to quarter based on our current methodology does not fully convey the acceptance and adoption of our products and solutions. To help address this, we retained an external Big Four consulting firm to update our current customer count methodology consistent with best practices to be consistent, systematic, and auditable. As a result of that review and adoption of those recommendations, we believe a metric that demonstrates contracted use cases that our customers are using our solutions to solve would provide a more meaningful understanding of the product adoption. This is defined as customer engagement. The customer engagement increased from 247 to 287, comparing Q3 23 to Q4 23. Our traditional customer count metric went from 236 to 244 for the same periods. There will be additional detail included in the supplement, which is available on our website. We are on track with our plan for profitability for Q4 24 and expect to have cash positive quarter starting Q4 24 on a consistent go-forward basis. The entire executive team is managing the business to have detailed budgets on our plan for profitability. We are expecting to invest aggressively to generative AI initiatives during the first half of the year, which is reflected in the operating income guidance. As it relates to the model assumptions that we provided 3 quarters ago for our consumption-based pricing, our preliminary analysis of the actual results suggests we are on that model. Overall, we're very excited about the business momentum as we start FY24. As a go-forward KPI for the investing community to assess our performance, we believe good KPIs to focus are the number of pilots started during the quarter, the conversion of those pilots to production, and finally, the actual vCPU consumption fees generated. With that, I would like to open this up for questions. Operator?
Thank you. Ladies and gentlemen, if you'd like to ask a question, please press star 11 on your telephone. Again, to ask a question, please press star 11. One moment for our first question. Thank you. Our first question comes from the line of Kingsley Crane of Canaccord. Your line is open.
Oh, hi. Thanks for taking the question. So, Tom, you said that sales cycles were down to 3.7 months from 5 months last year. Why do you think that is? Is this entirely due to the consumption model? How much of this is due to general excitement around the potential in the space, and even potentially increased Salesforce productivity?
No, I think it's, thanks, Kingsley. I think it's all of that. I mean, clearly, AI is on everybody's mind. The consumption-based pricing model that we have makes it much easier to adopt our technology. I mean, in the old days, 1 and 2 years ago, to do business with us was, $5, 10, 20, $50 million to open the door. And now the transaction is pretty much, we bring the application live in 6 months for $500,000. If you like it, keep it, and pay 55 cents per CPU hour or CPU hour. So we're pretty easy to do business with. And so we're seeing the number of transactions increase dramatically, as we'd expect. The ease of contracting with us. As you know, we have largely reconstituted the sales organization the last year and a half to a sales team that is candidly, much more productive and effective than our other sales organizations. So I think all of those are contributing to increased pipeline, increased business, increased business activity, about which we're quite optimistic.
Thanks, Tom. That's really helpful. And then one for Juho. Thinking about the timing of the transition. So if it is the case that the vast majority of existing customers are not necessarily migrating to the consumption model, how should we think about the contribution of consumption over time, and then particularly in the back half? Because I think that you said, revenue could accelerate as consumption increases in mix.
Yeah, Kingsley, thanks for that question. So that's exactly, as we sign and initiate more pilots within the quarter, the pilots are generally 2 quarters long, and then you start to see the consumption revenue kick in. As we finished the quarter with 19 pilots, last quarter we had a good increase in pilots with 17 pilots as well. You can start seeing those layer on to the revenue by Q3 and Q4 of this fiscal year. Now, to your point about renewals, we do expect our existing customers with the large enterprise agreements to continue to remain on those types of agreement structures, but you will see the RPO trickle down as these contracts enter into renewal phase, and then we would expect to see a pick up as they renew.
Okay, very helpful. Thank you.
Thank you. One moment, please. Our next question comes from the line of Pat Walravens of JMP Securities. Your line is open.
Oh, great. Thank you. Tom, can you talk some more about the opportunity with national security and the Department of Defense? And then also you said something I thought was interesting about a version of generative AI that doesn't hallucinate. If you could maybe comment a little more on what hallucinating is and how you prevent it from doing that. I think that would be really interesting. Thank you.
DOD, well, Pat, you've asked kind of many times about we have two basically authorities to operate contract vehicles. One's for 100 million and one's for $500 million in DOD that are associated. It can be applicable to what we're doing at RSO. So that was the Rapid Sustainment Office and the predictive maintenance application that we're doing for the United States Air Force for F-15, F-16, F-18, F-35, KC-135, etc. And what we made a proposal to the Secretary of the Air Force to take that into full production for all the aircraft in the Air Force, which is 5,000. I think the proposal would have increased aircraft availability for the Air Force by 25%, and I think decreased their cost of maintenance and readiness by about $6 billion. So he considered that, as did his Chief of Staff, General Brown. And they went off on their own for a few months while you were asking them the questions, and we didn't have the answers. And these guys go into their star chamber the way they do. What they came out with was a selection of C3 as the standard, as the system of record, not only for aircraft in the United States Air Force, but for all AI-based all predicted maintenance, okay, in the United States Air Force for all assets. So this is genuinely a big deal. Okay, now we have the opportunity to make this a line item in the budget. So this is, it's hard to, over-describe the impact of this or overestimate the impact of this. And then not only do we have it in the Air Force, we can talk now to other services like the Army and the Navy, okay, and the Marines and the National Guard and what have you. So this is a big one. The second one has to do with generative AI. So one of the problems with generative AI is you're limited to the number of data sources that you can use with these large language models. Typically, it's text, HTML, or sometimes code. And the large language model will interact directly with the data. Well, one of the problems is you get kind of random answers. Every time you ask the question, you get a different answer. If two people ask the same question, you get a different answer. And there's no traceability. It doesn't tell you where the answer came from. Okay, and finally, if it doesn't know the answer, it makes one up. This is what they call hallucination. So it doesn't know, so it just kind of wings it and makes up an answer. So we're using the entire C3 platform, and the way that we do that is we incorporate, as you, I think, all know, we're very good at aggregating enterprise data, extra-price data, code, images, text, sensor data, what have you, into a unified federated image. Now, when we do that, those data are read by a deep learning model, and they happen to be stored in a vector database. Then we have a kind of a firewall between that and the large language model. Now, our customer can use any large language model they want, be it Chat, GPT, be it Palm, be it Bard, be it Plan T5, whatever comes along next. Now, but we built a firewall between the large language model and the data. So it will, every time you ask the question, it'll give you the same answer. Okay, if two people ask the same question and they have the authority, they will both get the same answer every time. Associated with the answer, it provides you traceability, so you can click on it, you can see exactly where the data come from. Okay, and very importantly, there's no risk of LLM-caused data exfiltration. See Samsung for details, where they find out that all of their proprietary information is not published on the internet. Okay, and finally, there's no risk of LLM-caused hallucination. If it doesn't know the answer, it tells you I don't know the answer, rather than making one up. So, for these, you'd think would be kind of table stakes, and they are table stakes for any large commercial or government installation. And this is something that really distinguishes the C3 generative AI offering, and one of the reasons that we're seeing, very high levels of interest.
Oh, great. Thank you.
Thank you. One moment, please. Our next question comes from the line of Sanjit Singh of Morgan Stanley. Again, our next question comes from the line of Sanjit Singh of Morgan Stanley. Your line is open.
Appreciate you guys squeezing me in for the question. Tom, earlier this week you guys had a press release about the C3 Generative AI Suite being available in the Amazon Marketplace. And it got me thinking about what the sales motion going forward is going to look like. As you sort of mentioned, generative AI is permeating the boardroom, the C-suite, in a pretty substantial way. And when we look at sort of, converting this interest into deals and ultimately revenue, how much of this is going to be like flywheel kind of self-service, consumption-based marketplace type deals versus you working with partners, taking a more consultative approach and helping these large enterprise customers sort of navigate the world of generative AI and actually deliver value?
Great question, Sanjit. So our first 3 engagements that are involved in now will be our organizations, the order of 100 billion or greater in revenue, okay, and have we'll bring the application live in 12 weeks. We're not doing it and we have like 3 people on the project, so it's pretty straightforward. Now the issue of going from, say, 6 customers to 60 customers to 100 customers is pretty straightforward. We know how to do that, okay? The real key is, okay, in terms of blowing the doors off this thing, can we go from 6 customers to 60 customers to 6,000? So for 6,000, now we have to leverage these channels like the AWS marketplace where the product's available today, the Google marketplace where they're available today. But in terms of usability, it needs to be like the Apple iPhone. You open the box, you take the cellophane off, you turn it on, and it works. And so now we're, the next generation, the really serious development work that we're doing now on that product kind of relates to, really product design, okay, and making it like an Apple product. You open it up, you turn it on, and it works. And so that's the challenge that's before us. I think we're up to it, okay. And if we're able to hit that note, hold on to your socks.
Mm-hmm. I appreciate the color, Tom. And then maybe one follow-up. Maybe this is for Joe and Tom as well. And it sort of relates to the guidance for the full year. I'm trying to, contextualize like what's really driving the guidance for next year, because we're coming off a year, fiscal year 21. I think you guys grew north of 30%, 33, 34%. This past year, you guys grew sort of mid-single digits. The initial guidance calls for growth sort of mid-teens at the midpoint, sort of 20% at the high end. And I want to understand, like, is the acceleration you're seeing a function that you're coming off, a tougher year where you had spending environment was more difficult, sales reorg, those types of things, versus generative AI really coming online in fiscal year 24. And so is there any way you can sort of, attribute, those two things between sort of coming off of a tougher year versus, the demand that you're seeing in pilots and out in the field?
Well, Sanjit, let me address the premise, okay? Before we all wring our hands about tougher year. I think we got that in 4 times in the call for all the audience. Okay, let's remember, okay, when we announced the transition to consumption-based pricing, okay, we made it very clear that this was going to have a short and midterm, okay, negative effect on revenue growth. It's axiomatic. Anybody who knows how to use a spreadsheet can figure this out. If we're closing $500,000 deals instead of 10, 20, 30, 40, $50 million deals, the short-term impact on revenue is to dampen revenue growth. So I'm not certain that's so tough. Okay, that is basically we're executing exactly to the plan that we set. So this thing is exactly on track. Now, when you run this through your little Excel spreadsheet model and you hit the carriage return, okay, and you run it out a few years, a few quarters out there, you can do the math and you know what happens. But I'm not, so I think we're exactly on plan with what we did. We made the investment. I think it was a great decision. It was a good investment. And now in fiscal year 24 and 25, we're going to yield the returns from that investment.
Great. I appreciate the thoughts.
Thank you. One moment, please. Our next question comes from the line of John Katsingris of Wedbush. Your line is open.
All right, thanks for taking my question. This is John on for Dan Ives. So given the increased diversity seen, I guess, across industries served, how have you seen these use cases develop, and how do you see them playing out in the future? Thank you.
Great question, John. Well, right now, I mean, in terms of applying AI to enterprises, we're in, first half of the first inning and first guys at bat. Okay, so this is an embryonic market. I mean, where we're seeing the biggest uptake immediately, first it was in the smart grid. Okay, why the smart grid? Because they had invested $2 trillion, upgrading grid infrastructure globally to make all the devices in the smart grid remotely machine addressable. It's a huge IoT constellation. So that's where we saw it first. The next where we're seeing it in the past year, the largest market is in AI reliability, basically predictive maintenance. So they move to the military, they call readiness, okay, or in the private sector, they call reliability. So AI-based predictive maintenance is the largest segment today. How will this evolve? I mean, it's clear we will be applying AI to all business processes: production optimization, demand forecasting, supply chain risk, okay, stochastic optimization, the supply chain, CRM. I think there is no aspect of business operations that will not be, and medicine, okay, and research, and the science, and literature, and entertainment that will not be accelerated by the use of AI. So we're just going to have to, we're along for the ride and going to see where this goes in the next few years and stay on the balls of our feet as it develops, but it is a rocket ship.
Thank you, Tom.
Thank you. One moment, please. Our next question comes from the line of Mike Cikos of Needham Company. Your line is open.
Hey, guys. Thanks for taking the questions here. Maybe the first would be going to Juho. So I know that you guys had cited the 43 deals you closed this quarter. 19 of those are pilots. Can you further refine that for us? And maybe it's just the classifications or names we're using for this, but how many of those pilots are purely consumption-based versus maybe pilots that are still coming in under the old pricing model?
Hi, Mike. No, these would all follow the new consumption-based approach. These are not under the old model at all.
Okay. Okay. And so I guess the follow-up that I have on that is with the 19 deals that are consumption-based, and I know that you guys have 19 pilots that you guys closed that are initiated that are consumption-based this quarter, and the other pilots that we've cited in previous quarters. Do we have a feel for how many of these pilots have now converted to production? And do we have a gauge for what the VCPU is for those consumption deals once they move into production?
That's a great question. So, Mike, on the first quarter we announced this would have been Q2, which obviously you take 6 months from that, we get towards the end of Q4. So we are very early in that in the conversions. We are standing by with the model assumptions, i.e., whatever we provided 3 quarters ago, where it is each pilot is expected at 70% likelihood to convert into a follow-on consumption deal. But I would say that the first quarter for consumptions, we really will start seeing more of that this quarter, since it was late in Q2 as we entered into those original pilot arrangements.
Understood on that. Thanks for that. And then just one quick follow-up, if I could, but wanted to ask just on the professional services revenue. I know it's huge, a tick higher versus that typical 10 to 20% range we've been talking about. And I just wanted to see, is 10 to 20% still the appropriate range we should be thinking through, or is there maybe more hand-holding for these pilots that as you guys engage in them, or is it maybe hand-holding of potentially federal sector customers? How do we think about the higher pro-serve revenue generation in Q4 versus what you guys are thinking about over the next year?
I think on a go-forward basis, we expect to be in the 10 to 20% range. There's always going to be these types of projects that our customers want, and it's difficult to forecast a specific percent in a go-forward revenue, but we believe 10 to 20% is appropriate on a go-forward basis.
Thank you for that. I'll turn it back to my colleagues. Appreciate the time.
Thank you. Again, ladies and gentlemen, if you'd like to ask a question, please press star 11 on your telephone. Again, to ask a question, please press star 11. Our next question comes from the line of Brad Sills of Bank of America. Your line is open.
Hey, great. Thank you. This is Adam Brashear on for Brad Sills. So you're pretty well positioned in the current market, just given, AI use cases are coming into focus. So kind of curious if this has changed your cadence for R&D investments at all.
Well, this is Tom. I mean, clearly the investments we've made in the last 14 years are paying off. Okay, in that we have over 40 applications and people want applications, and I think we're the only company in the world that has 40 applications. I think the only recent change that we've made is we're a little bit shocked by the response that we had to C3 Generative AI. I mean, we're a little bit overwhelmed by that. That's a big opportunity. And so now we just came off a planning meeting and we decided to, really invest in that product category in a big way, because it's just difficult to estimate the size of that market, but it's extraordinarily large.
Yep, fair enough. And then for, kind of the generative AI use cases and solutions thus far, just I guess the first, just your first take on it. But do you see any, outsized uptake, or expect any outsized uptake within certain verticals over others in your view? Thank you.
It's a good question. It kind of seems like everybody is interested in this. They want, at the level of the CEO or the person who operates manufacturing and the person who operates sales, they want basically a Google-like interface where they get a web browser-like interface where they can ask any question about their business. Okay, where are the problems in our supply chain? If I'm the chair of the Joint Chiefs, what are my readiness levels? They have 35 squadrons in Central Europe. I mean, that's what we call Google for DoD. But their OpenAI initiatives can provide the Secretary of Defense or the chair of the Joint Chiefs of Staff answers to that questions in seconds. Right now, it actually takes weeks for him or for most people to get those answers. So it's I don't know any industry that will not be taking use of this technology. It's really quite amazing.
All right. I appreciate the perspective, Tom. Thank you.
Thank you. One moment, please. Our next question comes from the line of Mike Cikos of Needham & Company. Your line is open.
Hey, guys. Thanks for getting me back in. I did just have one quick follow-up. And maybe building on the question that Sanjit had asked earlier, but taking a different look, rather than looking at the revenue, let's talk profitability for a second. But obviously, you guys are issuing guidance now, which is below street and below what you guys had initially flagged if we go back a quarter ago. Maybe for Juho, can you help us think about the additional levers you have to pull on to ensure that C3 is achieving its target of exiting fiscal 24 with non-GAAP profitability?
Before we answer it, Mike, I do want to poke at the premise a little bit. Okay, I think our guidance is pretty much in line with what the street expectations are once you take out like one outlier or two outliers. So I think our current guidance is in line with what the street currently has. I'm pretty confident of that. Now, the other question related to, how are you sure you're going to get to profitability?
Right. So, Mike, one of the things that I had on the prepared remarks was our planned investments into generative AI, which combined that and vendor expenses. I think we can control spending towards the end of the year if, for whatever reason, the expected revenue would not occur from those. But we're pretty bullish about the generative AI opportunity.
Got it. Thank you very much.
But that being said, we don't need the generative AI opportunity to be. Generative AI could be zero, okay, and we're still going to run a cash positive, profitable business in Q4. We have a very, very detailed plan that's been distributed to all the members of the management team. They all have big budgets. They know what's going to operate, and you can expect it to be a cash positive, profitable business and non-GAAP profitable business in Q4. Hard stop. That's right.
Thank you. One moment, please.
One more question.
Thank you. Our next question comes from the line of Noah Herman of JMP Securities. Your line is open.
It was great to see, the average sales cycles for agreements tick down, I think, by about 1.3 months year over year. What's really driving that, and where do you think a sustainable sales cycle basically concludes that? Maybe thinking about the rest of this year. Thanks.
Well, I think the consumption-based pricing model is driving it, where it's pretty easy to adopt when you can have a large-scale enterprise AI application live in production in 6 months for $500,000. I mean, that's nothing, guys. In terms of what it costs to bring in an Accenture or an IBM or somebody to try to bring one of these things live, that's going to be scores of millions of dollars in years. So it's a pretty easy sale. It's a shorter sales cycle, and I'm not sure where it ends up, but as we move more and more of our products onto the AWS marketplace, the Google marketplace, and other leverage channels like this, we'd expect to see it get shorter.
Great, thank you.
Thank you.
Thank you. At this time, I'd like to turn the call back over to Mr. Siebel for any closing remarks.
Ladies and gentlemen, we thank you so much for your attention today. Thank you for tuning in. I encourage you to mark your calendars for June 22nd. I think you'll find that we'll talk about some interesting developments at our investor conference at that time, and we hope you'll have time to join us for that exchange. So thank you very much for your time today, and we wish you all a good night.
Thank you. Ladies and gentlemen, this does conclude today's conference. Thank you all for participating. You may now disconnect.
Okay, guys, that is the end of the C3 call. Again, I'm just going to say, listen, where are the guys at who said I had the wrong numbers here? That's all I'm saying. I'm not saying I was right, but I was definitely right about this. You guys know it. I'm going to be petty. Where are you guys at? I had the wrong numbers, they say. Feels good, man. It feels good. Listen, when you're right, you're right. When you look this good, humility just flows through you like water. And listen, we had the right numbers the whole time, even though everybody said I was wrong. I've been waiting about an hour to say this. Yep, we got the right numbers. You're welcome. Again, if you haven't already, hit the subscribe button. We cover all this stuff for free every weekday morning right here. So again, hit the subscribe button, hit the notification bell. We appreciate the love and support, guys. Also, if you want to check out our sponsors, check out Chart Prime. Chart Prime just did this really cool update. And again, Chart Prime is a trading view indicator service that you can use on stocks, crypto, Forex, futures. It's kind of custom indicators, but it's really cheap. It's like $35 a month. And so they just did this newest update. It's called the Market Oracle Pro. And again, look how powerful just their base. So this is the Market Oracle, just these base reversal signals. You can see possible reversal up, nice little bounce, reversal down, drop. Whenever you get this strong buy signal, it works super well from what I can see so far. Again, strong buy here. This is a 5-minute chart, like hours of bounce. Sell signal here, drop. Strong buy here, bounce, sell, drop, reversal up, bounce. And you can kind of use this in stocks, crypto, Forex, futures. Again, strong sell signal here, drop. Strong sell signal here, drop. Strong sell signal here, drop. Buy signal here, bounce. And again, it's just pretty accurate. I would say this is at least 70% accurate lately. And again, you can use it in stocks, crypto, Forex, futures, any time frame. It's called Chart Prime. It's like $35 a month. Again, they're a sponsor of mine, so check them out. They're pretty cool, honestly. They genuinely work well, I think, in my opinion. Of course, I can't guarantee you're going to get any results from it. Of course, nobody can. I definitely can't guarantee you're going to make money or anything like that. But here's the link. Check it out. And yeah, honestly, it's pretty interesting with AI here. We'll see what happens. Again, I wasn't super impressed by the earnings call, but again, maybe we're extended on the downside. I don't know what we're going to get from it. Again, if you want to check out Chart Prime, link is in the description. You can also check out Top Step. Again, if you want to day trade some of this momentum, you can kind of see how the market will move with a lot of this stuff. So here's the SPY. You can see C3 on the right at about $32. You can kind of see it. The market trends a lot, like very similar to this. So like here's the SPY. And then here's C3 on the right. So it looks very similar. And you can day trade the SPY in futures with no PDT rule. Funded account programs in futures work because they eliminate the big risk you take. Most day traders lose money. When I first got started day trading, I lost thousands and thousands of dollars. thousands and thousands of dollars when I first got started. I genuinely wish I had a funded account program in the beginning because I would have probably lost it still, but I would have just lost much less. And so again, TopStep is the most legit. I'm talking to the CEO about maybe coming on my stream one day, and I'll give you guys an update on that. But yeah, check out TopStep. Again, what they do is they give you a demo and they test your skill. If you could pass their test, they fund you between $50K up to $150K with a 90% split, and you get to keep up to $10,000 of your first money. If you don't pass the test, you probably would have lost more day trading your own money. And it's much less risk, much less risk. The base package is 130 something. If you use my link, you get 20% off. They're going to give you that demo, test your skill. Just take it the challenge, build your skill. But again, these are sponsors of mine. And so I'm definitely biased in their favor because they both pay me money. And so I'm certainly biased in their favor. I'm not trying to hide from that. But yeah, check out the link. But yeah, good luck, guys. Yeah, the call, I wasn't super impressed with the call. I think they could have done better, but I mean, let me know what you guys think. Well, Chart Prime's a sponsor of mine. So Chart Prime's a sponsor of mine, so I'm biased in their favor, number one, but I just think Chart Prime's pretty dope. They're pretty accurate. I paid for TradingView. Is there an indicator that's similar? I mean, there's a lot of free indicators on TradingView too, but I think Chart Prime ones are cool. Again, I'm biased. They're sponsors of mine, so they pay me money. So naturally, I'm biased in their favor. TopStep's not BS. If you pass their test, they're going to fund you. You get 90% of your profit. Most people that say it's BS just fail. And again, some paper trading accounts cost the same. Like the base package on TopStep's like 130 something bucks if you a month. A lot of paper like if you want to do DOS paper trading, it's going to be like 130 120 bucks a month. So I mean, again, people can say it's a scam. Most of the time they just can't pass it, and so they're frustrated. But anyways, I think people have to look at it from the right perspective. It's just build your skill. Like taking these build your skill. You can't look at it like you're going to get all this crazy funding for cheap, and you can, but you got to be really good at trading to do so. Most people are going to lose these funded account programs because most day traders lose, but you're missing the point of them. If that's what you look at them, like you're missing the point. Like the point of them is to build your skill. Like again, they condition you to learn how to trade under pressure for very cheap, much less. And if you think I'm wrong, again, if you put the money up yourself, say the PDT rule is ridiculous because they say you need $25,000 to day trade actively with a margin account. What new trader has any type of risk management skill? You give a new trader, some new traders are going to put up 25K and they're going to lose tens of thousands of dollars because, most day traders lose money. And so the PDT rule is absolutely bad for traders. It's just not good for traders. It ultimately makes traders lose way more money than they need. Think about how easy it would be to day trade with a $3,000 account freely. Yeah, you might lose some of that, but you're going to lose less than you would with 25K. That's why these funded account programs are useful. They teach you how to trade. If you're good enough, you can get funded. If you're not good enough, which is going to be most people are going to fail. You lose less than you would if you put the money up yourself. And so I think it's the best of both worlds. But check them out. Chart Prime is a trading view indicator service, but it's premium. So it's kind of like custom VWAPs and stuff like that. So if you want Chart Prime, you go to the site, you sign up. They'll give you they'll send the indicators to your email address on TradingView. So whatever email address you have set up, that's what they're sending them. John sounds like an old Navy general. He just needs coffee break and cigarettes. I don't smoke cigarettes. I used to smoke. I ended up quitting a long time ago. And I'm not a heavy drinker too. Like I'm not a big drinker. Can you please tell me where do you watch the earnings report releases live? I use a bunch of different sources. I use like Benzinga. I use Earnings Whisper. I use a bunch of different ones, to be honest. There's a lot of them. I use Thinkorswim. I use TD Ameritrade. I use a lot of different ones. But yeah, I'm not an old Navy general. I don't drink much. I'm just not a big drinker. Is everything else down in the market? Well, the SPY is pretty flat. So like, again, you can see the previous closing price here. Previous closing price yesterday. It looks like the updated previous closing price where this opened is 417.82. So the previous closing price is about right here. So this is where the market closed. So the market is down slightly, but it's not that down. Like it's down a little bit. The market's mostly break even so far in after hours. AI is down though. Nvidia is down. And then you can look at like the NASDAQ futures contract and see like the NASDAQ is down over the last 30 minutes or so. But why in the world would you sell this stock if you're going to make so much off of covered calls? I mean, you could sell calls, but the risk is very high if you do so. There's no code. You just go to the link, Nicholas. Yeah, so there's no code. You just go to the link. AI Tom, Chat GPT tells me, I don't use Chat GPT for it. I mean, I can, but yeah, guys, I'm out of here. Y'all be safe. Y'all be good. Hey, listen, tomorrow we got a bunch of stuff coming out. Tomorrow. Okay, so let me break down exactly what we have coming out because it's so much I forgot about it. But no, on a serious note, tomorrow, guys, we have non-farm employment change data. So the prelim payroll data that drops tomorrow, 8:15 market time. So the ADP non-farm employment change expectations are 170K for ADP data. Jobless claims, so like another form of unemployment, supposed to drop. All relevant for inflation problems, all relevant for economic problems, all relevant for economic stuff going on right now, recession fears, debt stuff going on. Again, so jobless claims, non-farm payroll data. We also have non-farm productivity and a couple other things. And then later on in the day tomorrow, we have ISM manufacturing PMI. So manufacturing PMI, it's the Purchasing Managers Index is what PMI stands for. It's manufacturing expansion versus contraction, right? So whether the manufacturing sector is expanding or contracting is what PMI gauges. And so again, we got PMI, ISM manufacturing and manufacturing PMI. I don't think it's services. Yeah, so it's ISM manufacturing PMI, jobless claims, non-farm employment change data. So prelim payroll data. The day after tomorrow, we get unemployment and payroll numbers. And we're going to cover it all tomorrow morning, bright and early. Y'all be safe. Y'all be good. Love you all, even the haters. And I'll see you guys later. Good luck.